Welcome, everybody, to our Long Options webcast. I'm Connie Hill. I'm happy to be here with you today. I'm happy that you would join me. So welcome, whether you're somebody that comes back week after week or you're somebody that's joining us new. So glad to see you here. We have a very welcoming community. So if you want to say, hey, it's my first time, feel free to chat that in. Would love to know that. Now, we're going to do something a little bit different than we've done in the past. And today we're going to start something that we're going to follow up with for maybe the next 3 or 4 weeks. Okay. We are going to use something called Heikin-Ashi candles that help display the chart a little bit differently than what you might be used to with regular candles. And one of the virtues of using Heikin-Ashi candles is it helps kind of get rid of some of the noise in the market. Sometimes we get thrown off with a little bit of noise. And so we're going to see how to use these Heikin-Ashi candles, maybe for some trades that might extend a little bit longer. All right, so that's what I have in mind for the next little bit. Now, I do hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having Scott Thompson in the chat with us. He is Scott Thompson CS. You guys know Scott. He's one of our great managers and has been trading the market for years and years. So as you have questions, go ahead, chat them in. I'm going to keep my eye on the chat, make sure I catch those questions that I can. However, if there's some things I can't quite get to, then we'll have Scott help me out there. Very good, but I'm happy to see you all here. Let's go through our disclosures and get on with our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be considered informational and educational. Don't consider it a recommendation. Investing involves risk, including the loss of principal. We'll be using the Paper Money software application. This is what you download to your computer. It's the most robust version of Thinkorswim. And so if your Thinkorswim looks a little bit different, you might be on the web, or maybe you're on one of the mobile apps. Past performance is no guarantee of future results. All right. We're going to talk about long options just in general for a little bit here. We're going to look at several examples. We have some trades we need to follow up on and make decisions on them. And then I have several new trades that I would like to get us into, but I also want to spend time talking about those Heikin-Ashi candles. And so let's just talk about long options in general. Let's see, Scott's put in the chat a short video on Heikin-Ashi candles. Ooh, thanks for doing that, Scott. I had not gone and searching for that yet, so appreciate you doing that. I'm not sure who did that video. It could be Cameron, it could be Barb, as they both talk about technical analysis. So it could be one of them. Scott can let us know. In any case, long options typically are directional in nature, which means we need the stock to move, right? We could get into other trades that maybe are verticals where maybe the stock doesn't even have to move all that much for us. But with these long options, we want them to move. We want them to move quickly. They are theta negative, which means theta is our value in our option that accounts for time decay. And when we buy a lot of time on an option, that theta value is really low. When we don't buy a lot of time with the option, that theta value is higher, and it gets higher the closer it gets to options expiration. And so that's why we kind of need stocks to move along and move fairly quickly, or sometimes we just need to get ourselves out of the position. Long options are Vega positive, which means if the implied volatility goes up, that typically helps the price of the option get a little bit bigger. If implied volatility drops, then that could negatively impact the price of the option. The most we can lose in a trade is whatever we put into it, right? If we go buy a call for 500 bucks, that's the most that we could lose in that particular trade. And, for simplicity, we don't really talk about the commissions factor here. So that's a little bit about long options. Okay, let's go make some decisions on our trades from last week. And then we'll get into some new opportunities here. All right. Now I have on my charts, and we're going to use these today. We're going to use, these are the basic candles. These are the candles that you're used to seeing, okay? on the new blue background. The 10 is this blue moving average. The 30 is this red moving average. And the 50 moving average is this green one down here. Okay, so they are a little bit shorter term in nature, as opposed to saying having a 100 or 200-day moving average out there. Okay, we're looking kind of at smaller and intermediate. Okay. Let's take a look at one of our, well, we've got 3 trades that are still in play right now. Maybe we'll just go look at them here first. And let me close some areas so you're not too distracted. All right, those are our 3 positions that we put on last week. Now, last week, our focus was on shorter targets, but using channels to help us decide our target, and moving the stop loss up if maybe there's been some significant movement towards our target. Now you can see all of our positions are at least to some degree profitable. We're going to start with Adobe. On Adobe, we actually did 2 positions here. We did an October option and a September option. We did the very same strike price, and the only difference is one had more time than the other. And as trades develop over time, you would start to maybe distinguish between the 2 time frames a little bit sharply. The stock hasn't moved a lot for us, okay? And so as I was tracking these all during the week, they were so close to being up percentage-wise about the same, even though the cost, the one that in October, was a little bit more. Okay, so our September option cost us $17.90 and the October option cost us $22.50. So you're like, okay, yeah, it's about $4.50 higher, right? Percentage-wise right now, our October option is up 12%, almost 13%. And our September options up about 15%. Now, honestly, that's the biggest gap between those 2 percentages that I've seen so far. Okay. Really, they were close. They were like, if I had a 12, then I had a 13. If I had a 15, then I had a 16. Okay. Meaning they were that close to each other. Now, today the stocks pulled back a little bit. So we can see both of those positions are down today. Interestingly enough, the one that is down the least amount today is our shorter dated option, the September options, down 212, and then today our October options down about 247. Let's go take a look at the chart. Let's decide what we need to do here. I should have you know that I changed the stop loss on this during the week. Let's pull up Adobe here. Our original stop loss on this was 252.22 to be exact. And maybe let's go here. Well, let's just kind of zoom in here. So this is where we got in last week. We're getting a nice bounce off this 10-period moving average. And our intent was to hopefully watch Adobe maybe make it to the top edge of the channel here. And so we put in a target up here a little bit. That target I haven't touched. That target was 285.12. Okay. Our original stop was 252.22, and I've been able to increase it a little bit so that right now it is up to 261.47. Okay. Where is 261.47? Let's put my mouse there. 261.47. Come on, mouse. I'm going to say it's pretty close to the edge of the channel, the lower edge of the channel. Not quite there. But really where that stop came from was going a little bit lower than the lowest price on this large candle day, okay, which seems to be following near the 10-period moving average. Now, at this point, we're in the trade about 5 days. We really haven't gone near the target area yet, and it's hanging in there fairly bullishly, okay? So I'm inclined to say we're not going to change our stop here, or we could actually change it if we wanted to. I think we should leave our target where it's set at that 285.12. Leave it alone. Where's 285.12 here on it now? It's pretty close to where my mouse is. Okay, kind of getting near the top edge of the channel, but not necessarily all the way up there. Okay. Let's see what kind of questions you have on this one. Some of you might be paper trading these examples with me and will have questions as you're tracking the trade. So let's do that. Looks like we're good here. Looks like we're good here. All right. So that's what's going on with Adobe. If Adobe moves and gets a little bit maybe above this midpoint line, we might consider moving our stop loss up to maybe 2 points or 2% below this midpoint line. And it's not stopping us out here, which we really don't want it to, because we're really trying to kind of let it hang around in the channel and try to run up near the top edge of the channel. All right, next up is Dash. DoorDash here has moved along nicely for us. Let's take a look at this. Got in again last week. Man, we might be really close to hitting a target up here, the way this is moving. Let's come over here, take a look at Dash. We're up about 58% in the trade, not too shabby. If somebody was interested in taking profits at this point, couldn't blame you, right? We're up $1,000 on the trade. But maybe we can do some fine tuning, okay, as far as where our stop loss is. Now, right now, we look at our stop loss on Dash. I've got a market order in here. Oh, it's not going to show us here. Let's come up to our working orders, find our Dash. And here we're going to do a right mouse click and say cancel replace order. We've got a market order out there for 2 different prices. One's our target, one's our stop. So on this one, our target we have set at 238.24. How close is this stock? That's not the right stock behind us. Let's get the right stock behind us, okay? Right now it's around 233, so our target, we're looking for it to go just a little bit more. Actually, let's just click on the gear, bring this up here so we can see. So 238 right now, it's at 233. We could adjust our target if we wanted to. I think we should just leave it there. Dash is moving quite well for us. Our current stop loss is at 216.63. How many of you would be satisfied to keep that stop loss there? Or do you think we're at a point where maybe we should increase the stop loss because we got filled at 1770? You know, there might be some people saying, well, we should at least bring it to a break-even amount. Okay. Feel free to type into me what your preference would be here, but I think we should adjust our stop. And the 2 ideas I had in mind were to do it based on the price of the option, where we say, hey, we're willing to let it retrace X amount, or do it based on the price of the stock. Let's come out here to the chart. The price of the stock that we could change to here, because it has moved quite nicely for us, we're in a position where we'd really like to have a gain in the trade rather than having it have a big gap against us or, you know, really move swiftly on us. We'd probably want to stop ourselves out of the trade and collect some profits. Now, today's low is 227, right on the nose. So we could say, hey, let's go 1% below the low, 50 cents below the low. We could do something like that if we want to tighten up quite a bit. Or we could base it on the price of the option where we say, right now it's at $27.97. So almost $28, where we could say, all right, stock, we're willing to let you retrace X dollars, but we don't want you to go back more than that. Some of you are going to ask, what about a trailing stop loss? You could do something like that. The trickier thing with trailing stop losses on options is how quickly that option price vacillates. and it can be easy to get stopped out on a trailing stop. I would say if you want to do a trailing stop, you've got to make it pretty big, meaning you can't put it on for 20 cents or 50 cents and think you're going to stay in the trade. That would mean you want to get out if you're going to put it on that tight. Okay. Let's see. Michael says, oh, you're talking something else there. All right. Kevin says, I guess that's what happens if you have a very tight stop near support. The trade desk said it was strange. Oh, you had a situation you're checking on, Kevin. Okay, I'll let Scott continue to help you out with that. Okay. For our purposes here, let's do it based on the price of the stock. Okay, our channel is kind of based on the price of the stock and getting to that channel. What if we were today to take the low 227 and let's give it maybe $2 lower than it? That would give it to 225. Okay. Let's go ahead and give it at least that much room. So based on the price of the stock, and instead of being right at 25, maybe it comes back, hits 25, so we go a little lower than that. Let's go 24.90. Okay, is where we're going to adjust our stop. It needs about $5 more to move to maybe hit our target. But again, if you were one that said, I am happy with the profits, I want to be out, I couldn't fault you for it. Okay, but we do want to start locking in here. So as we come back over here, let's go to our working order and let's do a cancel replace. Let's get it up here. And we're going to change our stop that's currently at 216. We're going to put it to 24.90. Now, some of you, oh, do you know what? This is based on the price of the stock. I think I'm missing something here. Let me go back here. It should be 220. We're going to bag the 24.90. Okay, we're going to base it on the price of the stock. Sorry, bad on me. Okay, lows today is 227. Let's go 224.90. I missed an extra digit in there. That's what my problem was. So let's get back to our trade. All right, now we'll put in 224.90 instead of 24.90. That makes more sense. Leave our target where it is. If you want to change it, couldn't fault you. But this is working well for us. Let's let it continue to work, but ratchet up that stop loss. Okay, that's Dash, that's Adobe. Netflix is not doing poorly on us. Okay, Netflix, we're up a little bit, 34%. It's better than a poke in the eye, right? If we're up 35%, maybe we are at a point where we do want to increase our stop loss a little bit, make it at least 675, or we'll probably go based on the price of the option or the stock here. So let's look at Netflix. Hasn't moved a ton for us, but it's hanging in there. It's still in its channel, doing well. Today is actually one of its better days that it's had since we got into the trade. Prior, we got in maybe near the top of this candle here. And so it's moved a little bit, but today really has been a decent mover for us. Where would you put comfortable moving the stop loss to? We initially had it below our channel line here, and we still could put it there, but just move up on the channel. Just a little bit below that channel line to me looks like it's 78 or so. I'm just going to write down that 78. Or we could do today's low price and go a distance below it. Today it's up to $2.05 or 2.5%. I kind of like the idea of giving it a little leeway. So your answer to how you might question could be different than my answer. Okay, but let's just go a little bit below the channel line here. I said that would be a little bit below 78. So let's go 77.80. Okay, we'll give it 20 cents leeway if it does come down and hit 78. Sometimes stocks bounce at even numbers. So that's why we might go a tad below that to the 77.80. So back here and open our working orders. Let's go change it. And Netflix is right here. We're going to do a cancel replace, go to the gear, and then we're just going to change that bottom value. Now we're not changing. Oh, I think I must have changed it during the week too. Right now it's at 77.10. If we raise it up to 77.80 is what we had determined. If it makes another more aggressive move, we're going to tighten the stop loss up, similar to what we did with Dash. It hasn't made a really great movement for us yet. So let's put it at the 77.80. And again, look at that stop every single day, see if it needs to be adjusted. All right, we're going to send that on. Okay, those are the 3 trades. That is our update on it. Next up, let's talk about these Heikin Ashi candles. Go ahead and chat in the chat if you're familiar with Heikin Ashi candles, or if you're somebody that has used them maybe or currently uses them to trade by. Okay, let's come over here to our chart, and I'm going to go to the gear. And on the gear, I'm going to go to appearance, and we typically have just been using a candle. All right. There's something called a candle trend, which takes into consideration yesterday's price action. And let's come here to the Heikin Ashi candle. And it changes the look a little bit. I'm going to have it not fill it up. And we are going to leave our moving averages in there like we have. The trades we have in progress, we're not going to use Heikin Ashi candles on. Okay, this will only be for the new trades that we do today. So what are these Heikin Ashi candles? Some of you are going to want to know the nitty-gritty about them. Cancel here. So I'm going to show you the formula, and we'll talk through the formula and what does it really mean to us. Okay, the open close, high and low are different than typical daily action because they're going to take into consideration some things from yesterday. Okay, so the closing price of the candle is going to have us take the open, the high, the low, and the close. So usually we're just kind of looking at the close, take all 4 of those and take the average of it. That's why we're going to multiply it by 0.1 or by 1 divided by 4 or a quarter, right? So that we can basically get, okay, what is the average of all of those? That's going to be our closing price. Our opening price is going to be similar in that it's a little bit different. We're going to take open from the previous bar. That means yesterday. So yesterday's open plus what? Plus whatever the close was on the previous day. And then it's going to multiply that by half. So basically we're taking the midpoint of those two. So the midpoint of the closing price and the opening price is the opening candle of the next day. Some of you might be going, well, what happens if we have a gap and the stock gaps up or the stock gaps down? That's actually one of the things that we won't see so much with the Heikin Ashi candles, is we are not going to see those major gaps and moves, which is actually one of the reasons we're kind of would be interested in using Heikin Ashi candles, because they smooth out those erratic moves. Get the right word, Connie. Okay. Yeah, it helps does some smoothing for some of these sharp ups and downs that we might see. And then the high of the day, it's going to take whatever was the highest. The high, the opener of the close is going to be our high price. And again, that'll be with a shadow if it doesn't close there, right? Typically, we're going to see shadows. And then the low price is going to be whatever's the lowest. The low, the open, or the close. Okay, whatever of those prices happens to be the lowest, that's what it's going to use, or with the lowest price there, that minimum of low, open, or close. So a little bit different way to look at this, a little different way. Now, some of the benefits, we talked about noise reduction. We're kind of smoothing out some of those erratic moves. It tends to show us a little bit more clearly the trend, and there's fewer false signals. Could there be any downsides to using these? There's always going to be limitations, right? In anything that we do, there's going to be like some good and some bad. So what would be the bad? What would we might need to know about this? So the price is going to lag a little bit. Since we're coming back here and we're looking at yesterday's prices, then the reflection of today's price isn't going to be reflected in there until a little bit later. And so that's why we say there's going to be a lag on it. We won't see the gaps like we already talked about. And this is very helpful in trending environments. It's using Heikin-Ashi candles in a sideways trend is not as useful. Okay, so I want you to keep those ideas in mind. If you need to, or if you're somebody that likes to know the nitty-gritty details, hopefully you took a quick, maybe copied down the formula so that you can reference it. All right. Now, we're going to go back to our chart here. And I did something here where I created a different style. So we can kind of go back and forth between what we've been looking over the last few weeks and what the Heikin-Ashi candles will look like. So I created a style where basically I said, we're going to do the same thing. Take the 10, the 30, and the 50 simple moving averages, but do the Heikin-Ashi candles. And I created a style for it, and I put it up here on my toolbar. So I can click here, and I gave it an orange background. That will help me keep straight. Am I on a Heikin-Ashi candle, or am I on a regular candle? We'd been talking about Netflix here. Let's talk about, or let's pull up some charts here and kind of talk through them a little bit. Now, each of the trades that we're doing today is coming from our liquid options watch list. Okay, so let's talk about what we're seeing here with the Heikin-Ashi candles and how we're going to use them. All right, so as we look at these Heikin-Ashi candles, you can see that how many bullish candles we might sometimes see in a row where we wouldn't necessarily notice a color change in the candle. Now, this is outlined in green. Might be a little hard to see that. You might just see it as a dark color, okay, but it's actually green. And this background color, to my eyes with a little bit of cataracts, looks a little peachy. Now, if you've got good vision, yours might look more pinky, okay, more of a pink tone. So if I say peach or pink, just know it's this color background. It's not the blue background, okay? And as we look at these, we can see, man, doesn't that kind of smooth out what the trend is doing here? Runs up, has a couple of change of the candles, which we are going to talk about what that means and how to use it. But notice how kind of it smooths that trend out. It doesn't look to be maybe quite as jumpy as when we were looking back here, where we see the gaps, we see the big candles. We're not on the Heikin-Ashi candle. We're not seeing this gap. We're not seeing that gap. Okay. I'm not going to go back and forth the whole time, but I did want to kind of point it out what we were seeing here and how it kind of smooths out that chart. Now, if we get tall shadows on our, say we're having some bullish candles and we get some tall shadows, that could indicate that maybe it might reverse on us a little bit. And when I say reverse, means trade to red candles. Okay, change from a green candle to a red candle. So notice here, let's just maybe zoom in as we analyze this. So here we had kind of a, I wouldn't say it's an incredibly long shadow to the top side. This next day is a taller shadow to the top side. And if we see maybe 2, 3, 4 of these in a row, it could indicate a potential to reverse to a red candle. Now, depending on how tight you want to call it, some people, if it's a significant red candle, they might use that as an exit and say, oh, the trend here is winding down for the meantime. They might choose to get out. If it's a smaller bodied candle, okay, and I would say this is smaller, this is smaller, this is smaller. If it's a smaller bodied red candle, somebody might not choose to take that action. This particular candle, as we're looking at it, hopefully you know that's a spinning top. What does a spinning top indicate? It could indicate a pause in the pattern. It could indicate maybe some indecision in the price. And especially if we have kind of a shadow here and a shadow there on the downside, that gives us the idea that maybe there's a little, maybe more indecision. Okay. So, but somebody could say, if I see that indecision, I'm going to exit the trade. We're not going to make a determination on this right now. But then when we see, for example, it ran up, had some bullish candles again, price pulled back a little bit, but then here we have a red candle that's significant. This body is large. Its high price of the day also turned out to be right here at the top of the candle. It didn't have a shadow to the top side. So that would indicate a little bit more bearishness. And somebody could say, okay, if I get a big bearish candle, that might be something to use as an exit in a bullish trade. All right. Now let's see what Marvell is now and why we might consider it as an entry. Now, a couple things. One, earnings is in a couple of days. There may be some of you that have rules that say, I am not going to enter a trade when we have earnings coming up. Totally logical. I get that. Okay. And we're not going to say we have enough time for this to trade or to trend and make a move for us before they actually announce earnings. Now, that's going to be at night on the 27th. I think that's the 27th, which is Thursday. We're already sitting here at Tuesday, right? So probably not enough time. I'll tell you why, aside from earnings being here, pretend it's not. The reason that I liked this for an entry on a Heikin Ashi candle is this. I like it because yesterday we had a bearish candle, and immediately today we're getting a bullish candle. In fact, earlier today it was up higher. But remember that our opening price here, which the candle would be showing right here, is relative to yesterday's close. Okay, so we're seeing some strength move in here quite a ways. So if we see a bounce, if we see a red candle the previous day and switching to a green Heikin Ashi candle, some traders might use that as the swing of momentum that they might consider getting into the trade. All right. The other thing here, I know I've got it in a channel just because that had been run in there previously. We're not trading it based on the channel. We're going to trade it based on the Heikin Ashi candles. And as long as it continues to give us either a bullish candle with a bullish body, maybe a hollow open body here, as long as it continues to do that without giving us big tall shadows at the top, or changing into a bearish candle, we're going to stay in the trade. Okay. It would be nice if it lasted a while for us. Sometimes on our long option trades, we've been doing some smaller targets. And this would give us the idea that maybe we could ride it a little bit longer, as long as we're kind of taking out the noise out of those abrupt movements of the candles, like gaps. So let's go to the trade tab here. Really, we're not going to consider anything really short term. Okay. We would probably consider doing something maybe in October, where we're hoping to get an elongated run, several bullish candles, before we get a bearish Heikin Ashi candle. Does that make sense? This is an expensive stock. Some of you would maybe prefer not to just buy the option outright, but because this is long calls and long puts, that's what we do in this class, okay? If you wanted to put it into a vertical, you certainly could, right? Use the same rules that we're talking about here, but just maybe that would help you position size it. So maybe it wasn't such an expensive option. It might be more doable if you're trading a smaller account, okay? For our purposes here, we're gonna go with the 240. It does have a little bit of intrinsic value here, but mostly time value, okay? In a comment that one of you said, it may have been in a survey or it could have been after class, I can't remember which it was. Somebody said, Can we talk about break-even points with long options? And this might be a good point to interject that, okay? By the time the stock comes to options expiration date, the only thing we have left in it is the intrinsic value, right? All the time to value has decayed. And let's come here, and we're just going to take a quick look here at looking at the position and then the intrinsic and the extrinsic value. So here's our intrinsic value. I told you there wasn't a whole lot of it on that 240 option. Most of this is time value. By the time we get to options expiration date, this value is going to be very low or zero. And so we really need the stock to move because we need it to make up some price for us here, right? We're going to spend $2,900 on the option. We definitely need the stock to make some move to cover that and to also have some intrinsic value. Okay, that's why we're going to go out a little bit further so that we can use these maybe Heikin Ashi candles that will smooth out some of those gaps. Maybe we can stay in a little bit longer. All right, I wanted you to see that. Basically, if you're saying, well, what's our break even supposed to be? That'll come up in the box, but basically just plan on whatever you paid for the price of the option. We need to cover that and then some, right? To cover that gets us to our break even. And this again is all by options expiration date. However, we hope to be out of here well before options expiration date. Let me come back to my columns that I had here. I think that's what we had. Let's go ahead. We're going to go ahead and buy this 240 option for our purposes, because we're going to take our exit clues from the candles. We're not going to put a stop on here. If your rules say, oh, always put a stop on, then always put a stop on, right? If you say, I've got to do 50% of the price of the option, do it. But because we're going to, for the next 2, 3, 4 weeks here, we're going to be working with the Heikin Ashi candles, we're not going to put a stop on it. Okay, that's why. So we're going to hit a confirm and send. We're going to put this in our long options bucket right there. Send it over. And I'm just going to put a little note here. I'm going to just put HA to know that we are basing this on Heikin Ashi candles. All right, just got filled on it. Next up. This one's kind of interesting. There's a couple here that are really interesting. 3M. It's been in a nice uptrend. It has been kind of following along with the 10-day moving average. It had really nice run through here. This was a small red candle. Some people might have not been all that concerned about it just because the body was so small and it didn't have really tall shadows. Again, it had earnings, so it must have been good news because then the stock took off. What's happening right now? Right now, we are getting a change in the color of the candle. We're not at the close of the day yet, and it could be different by the close of the day. But what I'm seeing here is that maybe we're getting in really early with the first greenish candle, right? Turning from a red bearish candle to a bullish candle here and being able to get in on the first day. Now, if you wanted to wait till the close of the market to see if in reality it ends up with a clear body, certainly do it. Since we're not going to be together at the close of the market, we're going to have to make a decision here in our class. So we're going to go ahead. We're going to pursue it. Okay. We're just going to do a similar thing where we're wanting to have those candles that are bullish continue to run. And then we're going to be looking for weakness in either tall shadows or the candle body turning red. Okay. And try to ride it as long as we can. Now on Triple M, we're going to go out to October 16 as well. These are the monthlies for October. These time frames are probably too short for what is realistic for us. Okay. Let's go to here. I want to see where the open interest is. Usually I see the volume here too. Let me get the right delta open interest. All right, let's use this column set. So delta open interest, what things look like this morning, how many new contracts have been entered into today under the volume. So there's a decent number of contracts out there. Let's try to get this at the midpoint price. We're going to do the at the money here again. Stock's at 179. We're going to go just with the 180. It's our at the money. It's pretty close to it. Give us 26 cents. It'll be in the money. And then let's try to get it maybe at a midpoint price rather than the natural price. Okay. We're just going to do one contract here again as we experiment with these options. If your position sizing allows you to do more, go ahead, do more. We're just going to do the one for our purposes here. And we're going to put that out in our long options bucket. And then I want to look at a couple more charts with you here. We might not have time to enter them as trades. However, let's look at these particular stocks here. Shopify. Now, if I kind of zoom out here, that was a nice long run of bullish Heikin-Ashi candles. Then it had a series of red candles. We would not be bullish through there. We'd be looking for downtrends. Somebody might have decided to go bearish with it at that point. But look at this nice little run here. Look at these nice bullish candles. Small red candle here. This little candle, man, that's a nice little doji. It's barely a green body. Okay, because it looks more like a doji. And then right now, what are we seeing? Same thing. We've had a nice little run, bullish candles, boom, a reddish candle. Some people would have said, okay, that's the end of our trend. We're getting out here, right? And then what are we seeing right here? Oh, it's just starting a new move with bullish candles. This day, a little bit not so sure if it was going to happen, but then we're getting some nice confirmation here and yesterday that that's the direction of the candle. So it'd be nice to get in at the beginning part of that. Okay, we don't have to be Johnny on the spot right here, but really it hasn't moved a whole lot since then. So we're going to put a trade on Shopify as well. And we're going to go out to October as well. Okay, give us some time to let it run, not just play it for 3 or 4 days. Man, if this extends 10 days, 12 days, 15 days, we'd be happy campers about that. Okay, 130 or 153, let's go with the 150 option here. Actually, 155 is a little bit closer. We'll do the 155. We have some decent open interest here, so we're not concerned about it. Let's go 155. Try to get it at the nearer to the midpoint price versus the natural price. We're going to put this in our long options. And I forgot to put a note on the other one that to put a Heikin-Ashi candle, but I'll go back and fix that. I'm going to send it on the way. All right. So we have 3 trades using, I'm going to call it the old system, the regular candles. Got 3 new trades using the Heikin-Ashi candles, and we're going to let them develop. My hope is that we're still in all 3 of today's new trades. My hope is that we're still in them by the time we get back next week so that we can see if we get a progression of movement with the candles that maybe can leave us in the trades a little bit longer than maybe getting out at the very first sign of weakness. All right. Now, your chat stopped coming through to me. So I don't know if there are some other questions out there that I did not address. Hopefully, Scott, you picked up those questions because it's been a long time since I've seen a chat out here in mine. Okay. Now, a couple of things. I hope you've already become a subscriber to our Trader Talks channel. If you're not, I don't know what you're waiting for. Okay. It just makes it a lot easier to find our content. You're out here. You can see, gee, what's coming up next? Well, coming up next, getting started with technical analysis with James Boyd is going to be our next class. And then you can see the rest of the afternoon what is going to be going on. Last class today will be this building a stock portfolio that Kevin teaches. I'll be out there in the chat. But then you can see some of our other lists, our playlists, our short lists, our bite-sized content. This looks like Barb just got one on 2 hours ago, brand new video about what is a bullish gap. You're not going to see it in the Hikinashi candles, but she will teach you about that bullish. And I did one the other day, last week, about showing you how to edit a Think script really easy in a short period of time. Okay, so love to have you subscribe. Follow Scott and I on X, Connie Hill CS, Scott Thompson CS. If this was helpful to you today and you're interested in this topic, go ahead, hit the like button. That will let others find their way back here to be able to find this class. All right, appreciate each of you being here. Scott, thank you for your help as well. And we'll track these trades next week. See you then. Bye-bye.